Rob, Mark, good to see you guys.
Good to see you. Thank you for having me on.
Welcome back, Mark. Good to see you. Excited to get into the conversation.
Mark, are you a Batman fan?
I do like Batman. I used to, when Julia Gordon was the FHA commissioner, she was Commissioner Gordon, so I always had this background on when we had calls with Julia. So,
I was in Boise earlier this week for the Pacific Northwest Mortgage Conference, and we happened to be at a like an outdoorish bar, the tap room. They were playing football. It was Sunday, so it was Sunday, and we hear this, and we turn around, and I'll be darned if there isn't a Harley Davidson being driven by somebody in full Batman regalia.
that was me.
Was Mark McArdle.
I was going to ask. That's why I brought it up. I was trying to ease into it, uh, and it wasn't cool. The Northwest can be cool this time of year. The nights get a little cool,
Yep.
but this was like 80 degrees and just full on.
That person is not comfortable. Yeah. That's a lot of leather and doesn't breathe, I bet.
Yeah. And he had kind of a scruffy beard, which I'm not accustomed to seeing Batman wearing.
Hmm.
So anyway, we digress. You're at home, and where's home?
Home is outside of DC, near Rockville, Maryland. So, and as we were indicating, this is my primary residence, my only residence. No occupancy fraud here at all. Zero fraud.
I'm sure Pulte and his team are looking into it, Mark, just to be safe.
I
But
don't think I'm on anyone's enemies list, but who knows?
I think they don't have any farther to look than Bill's in-laws or parents or
I saw
somebody.
that in your
I mean, if they really
trailer.
started looking, if they really did a deep dive on all the multiple primary residents, I mean, oh, that's the last thing that Pulte wants right now. So,
Yeah. And
if
it's
there was,
very rarely a criminal thing, right? Usually it's a civil penalty thing, if anything, and or it's part of a bigger case. Yeah.
I don't know. I never had heard of, I mean, obviously there's been talk about it in the mortgage industry. It's just something that, not acceptable fraud, but it's something that people kind of acknowledge probably goes on. So, but
To me, the more
Sometimes
dangerous fraud is always the reverse. So, I mean, in this case, they're claiming primary residency when maybe it's a second home. But there are times where people say, no, it's going to be an investment property just to get around some of the the ability to repay rules and other things, and you can do a debt coverage loan or something like that. That to me is a more dangerous kind of fraud. But all fraud is bad.
everybody's innocent. I learned that yesterday by watching the Shawshank Redemption. They repeatedly say that behind the walls. Oh, we're all innocent. I'm innocent.
filmed in Mansfield, Ohio, about 40 minutes south of me. And that prison where Shawshank was filmed, they do tours of it, but even better, starting in a week or two here, they turned into a haunted house. And
That's my son's favorite film. He loves The Shawshank Redemption.
Great movie. Great movie. All right, let's go ahead and get into it. This is The Big Picture, presented and sponsored by our friend Deb.
Wait a minute. Wait a minute. Wait a minute. Son, I mean, Mark, how old is your son? Like seven? I mean,
17 now. He
oh,
was seven, but
17.
yeah, I got an old one now.
That's, it's got some adult themes for a
No,
youngster.
yeah. He didn't. It wasn't a childhood movie. No.
Oh, yeah. All
Anyway,
right.
presented and sponsored by our friends at Depth, founded by mortgage tech industry vet Carrie Milam, managed by her excellent EVPs, Leslie and Lindsay. Depth is the PR and marketing firm getting fintechs noticed and fast. And fintech innovation moves fast. So team up with a PR partner that is built to keep pace. They are a great firm, great people. If you're a company that needs your story told, depthpr.com, get a hold of Rob or I, or you can easily find Carrie, Leslie, or Lindsay on LinkedIn. So there's that. Many thanks to Depth. I'm Rich Swerbinsky with Onward and Upward Consulting, joined as always my esteemed colleague and co-host Rob Chrisman. Rob, great to see you.
You too.
And this week, back by popular demand, it is our friend, now the SVP Regulatory Affairs and Public Policy for Newrez, one of the original architects of the TARP plan way back in the day. And when he was at CFPB, Mark, for many years, was the CFPB's guy that, they kind of sent out. He came to our mortgage collaborative conferences, almost every one for years. And we're talking before we went live, just would have the rooms packed because he would actually go and have these incredible, just productive talks with our lender members about what the Bureau was working on, how they were looking at things, and kind of demystifying the big bad wolf stuff that some mortgage lenders think about. It's our good friend, Mark McArdle. Mark, great to see you. Thanks for coming back.
Great to have me. I used to love those conferences. I mean, the more regulators can talk to the people they regulate, the better they'll be. And it was always like, it's one thing to think what's going on. It's another thing to actually talk to a loan officer, and hear the real story. So I love those conferences. I had a great time. And there's often too much secrecy about what goes on in DC.
So speaking of that, Mark, I heard a rumor that the fabled 1,500 people who were furloughed, put on whatever, they're being paid through the end of September, at which point they will be formally let go. Is that true?
So that is probably not true. As I understand the state of play is there's approximately 1,500 or so people left at the Bureau. They've lost a little more than 200, I think. About 5, people like me, a lot of people have left over the last months. There are some people who took the fork. Remember that? Those people get paid until the end of September. And then they come off the rolls. The rest of them, their fate is tied to the court cases. So the way that goes right now is they have until I think September 20th to appeal the last ruling, which was against them, the union. So that ruling said the Bureau can go ahead and fire everybody. And then they said you have 45 days to appeal. So they probably will appeal to what they call the whole full circuit of the DC court. There's a very good chance they prevail in that ruling, and then it'll go to the Supreme Court, and probably they'll lose there given the way similar cases have been decided there. So that means they'll continue to get paid, and this will continue to play out. And if they want to do a full-on RIF, it'll be probably several months before they can do that, depending on how fast this goes through the court cases and whether the Supreme Court takes the case and whether there's an expedited appeal or anything. But the second issue, which I think could be true, is the Bureau may not have enough funds because when they did the great big beautiful bill, they reduced the draw from 12% of the Federal Reserve to 6.5. So there may be a funding issue. I don't know the math, but to pay everybody 1,500 people plus all the contracts, as you know, the Bureau is paying for like Russell Vote's security contract and other things. So I don't know how the math plays out and whether they run out of money at some point. So that is a concern.
That is that liquidity. I mean, just ask any independent mortgage banker, the fastest way to end their business is cut their liquidity.
Yep.
In the form of a warehouse line or investors paying them for their loans. And so, that could happen, right? The administration, you could cut off any agency's funding. You don't have to close down the agency. You just reduce their funding.
And then, the draw is purely at the discretion of the director, which is acting director Russell Vote. So can he be forced to draw? Can he just not draw? And then at one point, there are things the Bureau has to do by Congress that's in Dodd-Frank. And if one of those things don't get done, what the cases more or less have said is we're not going to get involved with personnel decisions, firing and hirings. You have to first show that some required duty has not been done, and that hasn't happened, or at least that hasn't been shown yet in court. HMDA to continue to happen. I don't think there's a whole lot of supervision and enforcement going on right now, so there could be an argument there. And they published their regulatory agenda just the other day, and that's quite ambitious. There's 24 items on that agenda. There's I have it here somewhere.
Did they do it on a cocktail napkin, Mark?
Well, they do this they have 2 times a year they do this, in the fall and in the spring. And I just wonder who they're going to do this with, because they need people to, this is it's on the OMB website. There's 9 pre-rules, 10 proposed rules, 5 final rules, and a long-term action on QM. Among the things on here is loan officer compensation rules, the servicing rules, Equal Credit Opportunity Act is on this, and as I mentioned, QM. So
maybe they're preparing a package to lure you back, Mark, to take this
yeah.
all.
I loved working for the Bureau, but I don't know if that's what they're planning or not. It just there's a lot of mixed signs that I think people in the industry and elsewhere are trying to read, like what is going on with the Bureau. I think there's a lot of rules and things people want changed. LO comp, when I would go to TMC and elsewhere, I'd never stop hearing about it. So, but they're running, it takes time to write rules. They need to get going at some point and decide the staffing is going to be part of that.
A lot going on.
When you say they, I mean, who's they at this point? Is it all Mark Calabria?
No, Calabria, I hear, is less involved. So it's still, technically, it's Russell Vought's responsibility. He's the acting director appointed by the president. He leads several agencies. He's in charge of OMB, as Senate confirmed. He's leading USAID. So they call him the Grim Reaper. They give him agencies that are slated for demolition. And then he uses his deputies, Mark Paoletta, and there's several other folks at the Bureau right now, Ellie Greenbaum, some other posts who are political folks who are sort of directing the day-to-day. But most of my sources, my former colleagues at the Bureau, indicate there isn't a whole lot going on. There's supervision, there's some activity, they're closing out old opening findings. There is some rulemaking activity, but it seems like it's very low level and not as ambitious as this agenda would imply.
What are the you must be in touch with some of these 1,500 people who are watching I Love Lucy reruns, or maybe Hogan's Heroes at 5 o'clock before dinner. I mean, what are they doing?
Many of them are looking for jobs. Many of them are worried. That I think a lot of them feel like the long-term fate is not good. I mean, when they issued the first RIF that was stopped by the courts, almost all of them got it. Like there didn't seem to be any sort of sorting about like what do we need, who people who were non-political experts in RESPA, experts in various aspects of laws. Everybody got a notice, whether they were, there didn't seem to be a whole lot of sorting. So that I think was a really bad wake-up call for a lot of those folks. So many of them are just deciding what their next steps are and wondering how long this lasts. I mean, at least speaking for myself, I rather work than not work. So I think it is frustrating for a lot of folks to like not being able to do their job and the lack of clarity, right? I mean, your fate is out of your hands at this point. So that must be very frustrating.
A lot going on, and a lot going on also in the news, Rob. Once again, a litany of bombastic headlines this week. Judge rules Trump can't fire Lisa Cook. So now the Democrats with the 4-3 lead on the Fed board governor tally, keeping track at home. The Democrats now back in the lead, 4-3. Of course, jobs data, Rob, some really...
Wait. The Democrats are ahead in what?
The Fed Board of Governors, the seven, they're the seven.
Is that partisan?
Now it is, yeah.
So he wants the majority of this.
Yeah, I would argue it always has been, but I mean, now it's just I think openly, not openly, but if you're reading between the lines, but
that case will be appealed too.
That will be appealed. Yeah, I did hear that. Jobs data, Rob, a huge jobless claims number this morning, 263,000, 27,000 above projections, and the biggest number in 4 years. And then, my favorite topic, the BLS labor data. We got another million job revision downward. PPI, pretty in line. CPI, a little toasty this morning. But through it all, the stock market going wild. The 10-year touched 399 today, Rob. And all of that news, it all pales in comparison to Scott Bessent trying to attack Bill Pulte. Rob, I heard you were at the MAGA fundraiser. Were you there live? Give us the blow-by-blow. What happened here?
It was just a shouting match, Rich. Nothing, didn't come to blows. It was just swearing and yelling and scowling.
Okay. Pulte didn't try to bite his ankles or anything.
Supposedly,
his own ankles.
Bessent is put together. I mean,
Bessent is a purple belt in
want to fight
jiu-jitsu.
Scott Bessent. I mean,
So
he's a big boy. He's
there's a I don't
reached
know,
out to
Rich.
Elon Musk a few weeks ago. He's just, I think the Trump, I think he's the second term. He's like, I need some adults in the room to protect me from myself. You know, Besant's my favorite of all the Trump people, and he's just knocking out all the most radical Trump people with right hooks. So
I don't know where to start. So if you're on a plane a fair amount, Rich, if you ever want to take along a decent book, Doris Kearns Goodwin wrote a good book called A Team of Rivals,
Great book.
and it was about Lincoln's cabinet and the fact that you can have there's a management technique which encourages uh,
fighting.
divisiveness
Okay, divisiveness. All right, okay.
in
Internal
your
ideas.
cabinet.
Hmm.
It's not my style, probably not yours either. Probably not wouldn't be Mark, probably wouldn't be most people's, but some leaders tend to thrive in that. And I would probably put, I guess at this point, Donald Trump in that category. I don't know. But the fact of the matter is there was this public spat between Besant and Pulte, and um, I think it's much ado about nothing, but it is interesting the when you talk about adults in the room and so forth. I think during Trump one, the personnel had started to leave by now. There was turnover 6 or 8 months in. There's been very little actual, like the press secretaries stuck around. I forget how long Sean Spicer lasted in
Scaramucci. How many Scaramucci's are
Oh
there?
yeah, he was
exactly,
churning through
exactly.
press secretaries. The current one, I'm a huge fan of. I hope she sticks around the whole run. So
No, I think he learned some lessons from the first term and picked people that were going to stick around. But with the Besant Pulte thing, I mean, those two have to work together if there is going to be any kind of GSE release. I mean, they play key roles. Treasury controls the warrants and the preferred stock purchase agreements. FHFA will be the regulator of the GSEs. Those two, they have to work together to get this to, if it's going to happen. So.
did either of you guys see the Politico piece yesterday? It was all unnamed sources, but I think the title of it was like Republican lawmakers quote like Palti's a nut. It was like 5 or 6 different Republican anonymous, take it for what it's worth, lawmakers with it's worth reading if you haven't seen that one yet. So
I I posted something last Saturday or the Saturday before uh, that talked about the finances of the GSEs
Mhm.
and why why it's not a wave of the wand kind of
It was a
thing.
great summary. I remember it.
Yeah, it was very, very good. If people who are on this show want to shoot me an email and I'll send it to them. Yeah, it was a Saturday piece and it talked about basically the agreement that's in place has changed somewhat, but basically every dollar the GSEs make goes to the government. And the government isn't going away. So it's not a matter of, I mean, there are billions and billions and billions of dollars at stake. And it's not an easy situation. So I think that obviously it's a concern. And I was recently asked, kind of what I've been doing some traveling and what am I getting out of my travels? And I would say that there's this swirling going on. There's all kinds of things going on, Fannie Mae, Freddie Mac, the GSEs, FHFA, the government, CFPB, and so forth. And then down in the trenches, as I like to call them, you've got loan officers who all they're trying to do is help their borrowers,
Right.
or account executives, all they're trying to do is help their brokers, or whatever it might be, or vendors, slash third party providers. All they're trying to do is help their clients, and it makes it tough for a lot of these people, given what's going on in the headlines. So I think that it's like when I talk to some loan officers. Uh, so Rich, you can send me that email there. Um, uh, it makes it tough because they're like, I don't, I just want to just give me a decent rate and a decent product and let me help my borrowers, kind of thing. I don't need to worry about, I don't need borrowers asking me about what's going to happen with Fannie Mae and Freddie Mac
Right.
because we don't know at this point. And even if we kind of knew, even if Bill Pulte said one thing, President Trump might say something a day later, and we're back into confusion. So anyway, I'll get off my soapbox there.
And I've heard
One-
that's some of the contention, Pulte and Besson, I've heard, is Pulte wants to charge for, Besson is the one that is preaching patience with the GSEs. We have to do this the right way. We have to go step by step. Mark, any thoughts on the Fannie Freddie? Just, when and how and if?
I think you guys have hit some of the key points. I mean, this is a huge part of the mortgage market. Whatever they do, they have to think not just about what happens next year, but 10 years down the road, creating some kind of stable framework. What does the regulatory regime look like? If they're going to let private investors somehow get involved, what are their expectations? Do you want Fannie and Freddie to go, to be focused on investor growth? People invest in companies, hoping that they grow dramatically. And what is the right size or footprint for the GSEs? I mean, these are all questions that have to be asked. What's the role of the private market? How aggressive will FHFA be in whatever comes after conservatorship, if that's the end game here? And, I think everybody has said they want to minimize any impact on rates and make sure the spreads don't get wider. But when you introduce this kind of level of change, and much of this is outside of their control, investor demand is something they can't control. Who wants to invest in this? Are they going to remain under government control? Will a future administration change direction? These are all questions that I think investors and other folks have to ask. And I think Treasury is they're holding a series of stakeholder meetings where they're trying to solicit feedback and answer some of these questions. But to Besson's point, I think this can't be rushed. You got to make sure you do it right. You can't just do it for, some sort of, headline. You need to do something that works for all of us, loan officers, consumers, the whole system, because this is a key part, a cornerstone of our mortgage market.
Seems like it seems like they're backing off the Fannie Freddie quick, of course the famous quote about we're going to do it in 2025.
No way.
Yeah, there's no way. And it just seems like they're kind of backing off that. I mean, if you kind of like read the tea leaves, Scott Turner, HUD secretary, was out there yesterday and he said like he wasn't ready to speak to some of the thing. He said that we're like nonstop talks and alluded to the fact that Trump was going to be making some sort of announcement on affordability. Just basically said related to we're talking about every possible solution to get supply up and costs down. And kind of, and then they once again alluded. I mean, think about this. I mean, it's the number one issue right now, really. I mean, so we got the midterms coming up. You could just see them leaning into affordability more broadly, the admin, as far as what they're talking about, the talking points, the headlines, and then within that, housing being kind of like the nucleus of that. So it feels like we're going to get, some things from the federal government. Mike Flood also. He's a representative that he's the
Nebraska.
subcommittee chairman, of housing and insurance, which is part of the House Financial Services. He came out today and said they're working on massive bipartisan affordability legislation. He said that he hoped to be introduced in October or November, and he hoped they could get it done by June. Sounded like a major piece of like signature bipartisan affordability legislation that's coming down the pike. So, Rob, you're wincing and grimacing over there.
I I I remain skeptical of much happening at the congressional level in terms of residential lending at this point.
Even housing affordability, it seems pretty bipartisan. Mark, any thoughts?
I agree it's bipartisan. It's just hard to affect. I mean, there's so many pieces to it. I mean, supply, local zoning codes, things that they may or may not have control over. You can, lower rates, but if you lower rates and there's still no supply, all you'll do is push up prices. People will bid more for that house because they can afford more. So, I mean, I do believe supply is key, and I do think they have fewer tools at that. We all know about the lock-in effect and how do you sort of help, folks take that hit from when they move from their 3.5% rate to something higher. So I don't know. I mean, I think there's just so many different things beyond their control here. And yeah, I am also skeptical that they can dramatically move the dial, despite the fact that everybody wants to move the dial on both sides of
Yeah,
the.
I, along those lines, and I'll continue to wince here, Rich, but if you look at something relatively contained, for example, Mark, you alluded to, and Rich and I have talked about this a number of times. It's not just the mortgage industry's fault the affordability is bad. You've got homeowners insurance, you've got HOA fees, you've got special
Absolutely.
assessments, you've got property tax, you've got utility hookups. I mean, the list goes on and on and on. And so it's not only, oh, let's go build 1,000 units in Eastern Nevada and away we go. But you would think that Bill Pulte is a big follower of Donald Trump, and he would do what he's told. And there's this talk of a housing emergency. Why? How about, hey, Bill, how about you adjust the guarantee fees downward to make them more, make them more in line with the ability to repay and the quality and credit quality of the loans that borrowers that we're seeing now? Do guarantee fees really have to be in the 70s? So
Well, they have to be. If they're going to take them public, they can't lower. But
that's just it.
should they consider reversing course on Fannie Freddie? We've talked about this. The easiest way to impact affordability by far, we could do it tomorrow. Lower G fees, lower LLPAs. It could be done literally tomorrow. It would have massive impact. I
That's what
mean,
I'm saying.
yeah.
But
But
you would think that could happen without declaring a national housing emergency. Donald Trump could say, Bill, what do you think we should do here? And Bill would say, well, if you really want to do that, I can lower G fees down to, 15 or 20 or whatever they used to be back in our heyday. The other day I heard a 9. Somebody had a 9 G fee. Hey, Bill, do that and have Bill tweet it out and away we go.
but
But that
then that's
hasn't happened. That
but
hasn't happened.
is that consistent with releasing them? Is that consistent with, building up capital? Is that, I mean, they would have to choose one path or the
Right.
other. I'm not sure you can lower G fees and release them. And then back to the bigger point, you can lower G fees and it'll be cheaper to get that mortgage, but you still need the house to buy. And, yeah.
I can't see who knows? I mean, I'm sure they're talking about it. I mean, as I've said a million times, I'm in general in favor of privatizing the GSEs, but this part of it I'm really struggling with because they wouldn't lower G fees, they wouldn't lower LLPs. Realistically, as they went through this, rates would probably go up a little bit. And they would have to reduce, as Mark Calabria told us a number of times, the credit box by the riskiest 5 to 7%, which is going to push a lot of, there's already a lot of people that want to be on the edge of approval. You would shove a shit ton of them to the I can't buy a house zone, if you get rid of the riskiest 5 to 7% of the GSC credit box. So it's going to be fascinating to see how it all plays out. So, because we're going to know, I think, quick. This administration, they're moving on things quick. Trump's second term, lame duck. He's doing things quick, and he just wants to
Rich,
get.
you didn't see the news today that he's going to run for a third term?
Well, Poly Market, it's a 13% chance that he wins the presidency on Poly Market right now, if I'm not mistaken. So that's where you can actually bet on what's going to happen. Yeah, so I think Vance was like 38, 40% ish. Newsom was like 28%. Rubio was like 15%, and Trump was 13% in terms of where the betting dollars are going.
And
So
Rob Crispin got like 5, I thought, right?
Yeah,
Rob
right.
he was 7% actually.
Oh,
Yeah.
7.
Among cat lovers and retirees.
Mhm. But Mark, tell us about the new gig at Newrez. Tell Newrez, I mean, it seems like arrow pointing up company. They're in every channel. They seem to really be growing. They have a lot of
Yeah.
positive kind
I'm
of around them. Yeah.
I'm having a blast. I'm learning a lot. I mean, it's the third biggest servicer, and in the second quarter, we were the fourth biggest originator. Like you said, we have all the channels. We do correspondent, we do direct to consumer, we do, brokers. We have all the different channels. We have all the mixes. We do non-QM. We're one of those lenders who, like, even if the GSE shrank, we see a role because we could also do non-GSE, non-agency loans as well. And so I'm learning a lot about that part of the business. I think it is a dynamic company, and my job is to like track all these regulatory things, the things we're talking about, but also like I have all the states now too to sort of figure out because IMBs are regulated at the state level. So I have to track the 40 bills that are going through California at any given time, and Massachusetts, and what the Ohio Attorney General is doing, and whoever else. So it is certainly a chaotic regulatory environment to track. So I'm doing my best. But like I said, I'm having a great time. I think it's a good company. So
Is there anything on just, Trump is clearly a lower regulation guy. He hasn't really got into any of that yet. Is there any looming deregulation potential in the mortgage industry that companies like Newrez are looking at that like, hey, this could be something coming down the pike that's realistic that could really help?
so it goes back to like what are they you can make the Bureau do less, but that's not deregulatory. I mean, all the rules are in the books. Like you need them to do something to actually change the rules. So if you want different LO comp rules, if you want a more streamlined servicing rule, they're going to have to do that. If anything, I think we're worried about states stepping in, seeing a bureau not active, and coming up with more and more laws of their own. The No Foreclosures Ever Act in California, or many of them have CRAs that apply to IMBs that will have added requirements as to what you have to do and who you have to lend to. So I don't think most IMBs that I talk to think there's any big deregulatory wave. Most of us are keeping our eye on the ball, doing what we've been doing before, compliance testing ourselves, because you have the states there, the FTC can sue you. You also have private rights of, Loan Depot just got sued on LO Comp by private litigants. So I think, if anything, it's just a more diffuse regulatory environment right now. I think, like many in the industry, we'd like to see changes. So I'm hoping that the bureau, whoever else, can get to work. But until then, we're just tracking all the different things coming down the pipe.
This is The Big Picture, presented and sponsored by our friends at Depth. 20 years of being a leading voice for fintechs across the mortgage space. Check them out at depthpr.com or get a hold of Rob and I, and we can get you connected with our friends at Depth. Rob, your hand is up.
I would think we should have somebody from Depth on here sometime to talk about current trends
I would love
in
it.
marketing and public relations and what they're seeing among their clients.
It's a big topic right now in the industry, and I think that, would be a great idea. So
Yeah.
we'll make it happen. So here we go. Mark, what else in your world? We talked about this a little bit before we went live. The OMB, they're formally looking at right now RESPA and LO Comp. You would have to think that something will be done there once they, have time to analyze that and put something out there. What are your thoughts on that? Do you anticipate changes coming for LO Comp and RESPA?
I think there's, as you know, the NBA has been pushing for changes to RESPA for a while. They had that RESPA 50 paper. So I think there is momentum for some changes around, what is allowed, what isn't, or especially around Section 8, the fee for referral piece. On LO Comp, there's always been pressure to be able to lower your LO Comp in response to competition. But you can't rescind LO Comp because it's in Dodd-Frank. So if the rule is rescinded, it goes to the statutory language, which actually is more onerous for lenders than the LO Comp rule. It basically says you can either pay your loan officer or you can take origination fee, but not both. So I think they need to fix the rule. It takes time to fix a rule. As you know, it takes something like 9 months to do a proposed rule, receive comments, and then do a final rule. So I think if you want changes, like another thing that's always been talked about, even when I was at the Bureau, is maybe a streamlined refinance rule that will allow someone who's performing in their current loan, if they're going to a lower payment, to be able to, not do the full ability to repay analysis. That's something they should be starting on now if they want to catch the refi wave of the future, right? If rates come down to like 5.5 or something, there's a sizable number of borrowers who could benefit from a refinance, who are paying and are current in their current mortgage. So I think there's a lot of changes that the industry would like to see, but they need to be out there. They need to have people like I used to be out there getting the feedback from industry. You want to do the rules right. You can't do it in a vacuum because that always leads to problems.
Yeah.
Mark, when did you leave the CFPB?
February of 2025. So I've been out, what is it, 6 months, 5 months?
You look 10 years younger.
Well, I hear there are
Mark, any
parts like
guidance or go ahead, Mark. I'm sorry.
I mean, they're like I said, I like the bureau. I like the idea of trying to make sure that there was a feedback loop occurring, and I hope that some version. I think we need some version of the bureau to exist. I think there is to have it all large IMBs like Newrez, like Rocket, like PennyMac to be regulated only at the state level doesn't make a lot of sense. I think working the states and the bureau could work together in a cohesive way to like sort of reduce the burden to make sure that there's one interpretation of the rules. So I think that would be helpful. And so I would like to see some version of the bureau come back. God knows they did things wrong, that changes are needed. There's too much power in the director, perhaps. There has to be some sort of check on that so that you can't, sort of reshape the economy according to whatever you think, the most aggressive interpretation of the statutes.
I think the consensus in my travels that I hear, Mark, is that the industry needs the CFPB. It doesn't need the CFPB that existed at the end of, the Cordray era or the Rohit Chopra era.
I agree. I couldn't agree more. Like Kathy Kraninger, I think was a director that I think was pretty good, who always aimed for the center, who was transparent, and the bureau is not there to be a tool for experimentation or a laboratory. You're supposed to enforce the rules in a transparent manner and serve both the regulatory entities, that means all the lenders and everybody else, as well as consumers, and balance those two interests out. I'm not sure we always got the strike zone there.
The problem, and I agree with all this, like that the industry needs a CFPB like entity. It's just all this being under the government. It's just like every 4 years, it's
It's
just
horrible.
it's so disruptive. Like when you have to restart, like, these should be independent or entities, Fannie, Freddie, CFPB, even HUD to some degree, I would argue. And
Especially
that's
FHA. I mean, FHA, generates money for the government, and yet they are still stuck on their old salary scale. I mean, there's been talk about that for a long time. But FHA basically subsidizes the rest of HUD, and they don't have the independence that they need to sort of. I think an ideal regulatory environment would involve independence. That's was the idea to have the bureau be sort of independent from this political swing. They made the director fireable, and I'm not sure that helped. And even things like commissions don't seem to be that immune from politics, as we saw. They fired the boards at NCUA and FTC. So I don't know what could create that sort of balance. When I left the bureau, I talked about a board of directors of sorts. Maybe the bureau could have a panel of half advocates, half industry, who would be a check on their actions. I don't know. I was blue skying ideas that how the bureau could go forward in a way that would have some sort of check and balance on it. But you're right. We can't have these 4 year swings.
It's like, you get a new president in, then they kick out all the old people. Their people they nominate. It takes 4 months to nominate them, takes 7 more months to get them approved. They start to get in there, they start to make waves and make momentum, and then they're gone. It's
Yeah.
like it really is just it's a tough situation. And I do think, like, the whole bailout, right, in '08, in hindsight, like at the time, everybody's like, oh, it's so stupid, the government can't do this, it's gonna, it ended up being one of the most profitable endeavors ever for the federal government, bailing out Fannie and Freddie. So I think that was smart at the time. And but now I really, it's time to, get the government out of housing would be my take. So
Well, I mean, how many? This has always been a mystery to me, but we're talking about collateralized lending, but 8 out of 10 mortgages are backed by the government in some way, shape, or form. That's not the case in other countries. So,
you got a monopoly, but Fannie,
yeah.
Freddie, Ginnie, I mean, they have a total stranglehold on the mortgage market. And yeah, we'll see what happens. But going back to what we were talking about earlier, I think we're going to know soon on like Fannie, Freddie. Are we going towards public? Are we going to like kind of keep them as a utility and try to use them as a vehicle to improve affordability? Because I could see that happening. They're talking about affordability so much, the Trump admin right now. I wouldn't rule anything out that they feel can help them politically as we get into midterm season. So there's
I would agree. A note just flashed up about mortgages in other countries, and occasionally I receive emails like, "Why can't we be like more like Denmark, or why can't we be more like Australia? They have this program, or Canada has that program." And I remind them that the size of this homeowners population and just general population doesn't lend itself so much to some of the things that are done in other countries. Uh,
Well, and the 30-year fixed is a hard product to do in other countries. It's a fixed low fixed rate for long term. Usually you can have an adjustable rate in a longer term or a fixed rate in a shorter term, but not those two together.
yeah. And the portability of mortgages. Why can't if
Yeah,
somebody gets a loan on one home, why can't they move it to another? Well, we've got this thing called the securitization market, and collateral, and investors who bought those loans thinking that the loan was on 123 Main Street, and now it's not. They're gonna be like, well, wait a minute, what's going on here? So it's not easy, but I would say, as I've said before, uh, the the if you were to design a mortgage system from scratch, you would not have what we have now
right.
here. It's been
Yeah.
cobbled together for decades, and oftentimes we pay the price.
Yeah. And the choices, just like when we made Fannie Mae, originally Fannie Mae did what Ginnie did, right? They used to securitize the FHA loans only, and then they decided to broaden its mandate and make it a private public thing, which at the time might have seemed like a good idea, but
There's
it
been a lot of
ran.
talk about Ginny, Mark, outside of, delinquencies are up right now on FHA loans. You hear that in the news a lot. But I mean, I would surmise like FHA and Ginny, they kind of just keep doing what they're doing. I mean, they're going to be so consumed with Fannie and Freddie. What do you think?
Ginnie Mae's market share is as high as it's ever been. So, it's almost 30% of the market share out there. I think 18% FHA, 12 VA, but VA has been growing too, and they're both very good products. Like if you're looking for a low down payment product, or if you're a veteran, the FHA and VA offer very good products. They've done a lot of things to improve, the customer service part of it. On the back end, their loss mitigation used to be very chaotic, but they've made changes there too that are better. So I think Fannie, FHA, and VA, that is the explicit government backed part of the market, and I think that there's a role for that, right? We want to sort of create a subsidized sort of backstop for first time home buyers and for veterans, because those are populations we care a lot about. I think what's happened over time is the lines have blurred, and then you see times when like Fannie and Freddie are competing for the same borrowers as FHA. Which government backstop are we going to have? Is that effective? Often what happens is Fannie and Freddie would take the highest credit quality borrowers from FHA, which weakens FHA. So I
Well,
think
it's another thing to consider with the GSEs. If they
yeah,
take the public and they have to shrink the credit box by
yeah,
5 to 6%, FHA's market, it's gonna go up a bunch. And does the government want that with
yeah.
delinquencies at high levels? Like, would they view, even though the reserve fund is at a strong level, is that what they want? But or would they, then the other piece of that is like the Newrezes of the world, like the non-QM originators, right? You start to dip your toe a little bit more into that water. It'll be interesting to see how that all plays out.
Yeah, it's a growing market,
Oh,
non-QM, but it's still small.
Yeah.
it's small, but obviously it's growing, and
7% of the market right now, I think I
Yeah,
heard 7.
5, 7,
yeah.
depending on how you
It
measure.
was
But yeah,
5, maybe it's
yeah.
7 now. It's clearly gone up a little bit
It
these last
it's
several
an
months.
important product for us, and we think it's not like people, compare it to like it's nothing like subprime. It's high credit quality, but sometimes it's people who don't fit the typical boxes all the time.
Mhm.
Yeah, there's the conspiracy theory that says that Fannie Mae and Freddie Mac are already shrinking their market share in preparation for something down the road. And the non-agency, aka non-QM world, is quite excited by that.
Have you heard that, Rob, just from your travels at DU and LP, or in some lenders' perception getting a little bit more tight, maybe?
Um,
Seems
no,
like.
but they're not, the agencies you could say are going 10 miles an hour in the fast lane.
Mhm.
They have not reacted like other investors, non-agency investors, non-QM investors. They have not reacted to changes in the borrower landscape and
Mhm.
property landscape as those other entities have done. So by just s- keeping the same, keep on keeping on,
Yep.
they are forfeiting, you know, I don't know, gig income, ADU income,
Yep.
renting out your garage to the local rock band, including that income, different property types. By not incorporating that into their guidelines, they are forfeiting that to other lenders, the E-resis of the world.
Mhm.
And so who are more than willing to step in and say, that borrower has the ability to repay, and we will lend on that, you're on 10 acres in eastern, Montana, or whatever it might be, that, non-warrantable conduct, whatever it is. And tough luck, Fannie Mae and Freddie Mac. We're happy to step in.
Yeah, things like cash flow underwriting have a lot of promise, and Fannie and Freddie do it on the margins, but non-QM lenders are starting to say, like, is DTI the best way to measure a borrower's capacity to repay? You know, it doesn't capture things like rent, as everyone knows, and all the other bills that you pay. When my kid was little, daycare was the biggest single expense I had, and it wasn't captured anywhere.
Is
So
this the is this the same child that likes the
that is now
Shawshank Redemption?
that is now about to go to college. Yes.
Good stuff. Mark, any final thoughts for the audience before we bid adieu?
I, you know, like I said, I'm hoping that there's more clarity going forward. I think most, like you said, most lenders, you, me, Rob, we all can agree that, there's a middle course here that we could probably navigate. That would be the best thing for the consumer and not tear apart the, CFPB just to do it, but to think what makes sense. And the same thing applies to the GSEs. Let's think long term, what's best for the mortgage market, and not think through a partisan lens. But I think that's what I hope will happen. But I don't know.
From your lips to God's ears. Yeah, it's like seems like there should be more of that in the world. Like just things that make sense that aren't motivated in some way. So, Rob, any parting thoughts before we bid adieu?
No, I'm off to a Top Golf event here in Jackson, Mississippi.
Oh, Jackson, Mississippi, down there in SEC country, Rob. There you go. What are you doing down there?
Wait, SEC country. What league does like
SEC is
the
now the whole
Berkeley
country.
Bears? What Cal Bears? What are they in this league?
I think they're in the SEC. Yeah, I don't know what they are. Now, there's no more
I,
SEC country. Yeah, it's like just yeah.
I've lost track.
Oregon's in the Big Ten. That's all
I
I
thought
got.
everything was in the Big Ten now. Yeah.
All right. Well, I want to thank all of you for listening, watching. If you watch on YouTube, thank you. Subscribe to our podcast. And since I signed up for the live, ChrismanCommentary.com, we do the show live with a pretty lively live chat. Rob, you're showing off something on your shirt there. What's that say?
It's Countrywide Credit golf shirt.
Oh,
Countrywide Credit. Oh, there you go. That's all right.
It'll be a big hit.
Okay. All right. There you go. So, but I want to thank you for joining us. And we're here every Thursday, 3 p.m. Eastern. And thank you for joining us. And yeah, everybody have a great rest of the week and weekend. And we'll see you next Thursday. Thanks again,
thank you
Mark.
for having me. Bye.
Absolutely. Take care.
Thank you. Thank you, Deb.